Welcome to another Market Matters weekly video. I'm Nicholas Forsyth, Director at Market Matters, and I'm joined by James Garrish. James, welcome.
Thanks, Nick.
James, back after a week off. We didn't do one last week, so let's kick it off. Reporting season. Just quickly, has it exceeded your expectations? Anything in particular that's caught your eye?
Yeah, it was a good reporting season, so more beats than misses on an EPS level, earnings per share, as well as revenue. So that's obviously a positive.
Yep.
I think the main takeouts was expectations were high leading into reporting. EPS growth of 18%, which is massive relative to what we've been achieving in reporting seasons gone by. All the growth coming from resources, industrials, banks, etc. There hasn't been any growth, and that's still the case after reporting season. So all the growth is still in the material sector. So this short-term pullback in materials is probably a buying opportunity.
Awesome. And I guess Trump spoke yesterday. Markets liked it. Probably pretty light on detail. But anything in particular that caught your eye around that speech, and has it affected your thought processes, over the last 24 hours?
I think the main takeout is that they're going to throw a heap of money at infrastructure. It's a pro-growth speech. He came across better than I probably expected him to come across, and sort of encapsulated or got more buy-in from the American people. Last night, big moves in the equity markets. Dow up 330 points. The biggest move or interesting move was in the bond market. Bonds got sold, pushing yields up. And I think the key takeout here is global growth is going to accelerate. Inflation is going to go up, which means interest rates go up. We spoke about it this morning and yesterday afternoon. So an environment of higher interest rates globally really will dictate what sectors of the market you should be in. Financials do well, as we discussed this morning.
Just quickly, on rates here, we talk about it extensively in the reports, but no change this year. Still our sentiment, probably no more cuts. With them rising in 2018, or does this, rates going up quicker in the US affect rates here, and we may even see a surprise hike?
Yeah, so I mean, interest rates, with the one that you look at, the RBA cash rate, that's probably not going to go anywhere this year. Certainly not a cut. We had housing data out this week, which was incredibly strong. So I don't think there's a case for a cut there. Obviously, bond yields going up in the US, bond yields going up here, impacts the cost of capital, etc. So that has flow-on impacts. But rates grinding higher globally is the key takeout there, Nick.
Okay, and now I just want to talk about the alert we put out the other day and the portfolio shuffle we did. Fair bit went on there. There was a little bit of lightening, a little bit of adding to certain positions, a couple of switches. Now, just thoughts on that, reason for that, and the stocks we bought, just quickly on one or two of them.
Okay, so Vocus and Platinum, we tweaked both of those. We trimmed Vocus by 2.5% just around risk. We increased Platinum by 2.5% because it was going ex-dividend yesterday, nice fully franked dividend.
And it held its dividend,
didn't it? Held most of its dividend yesterday. So in the outright portfolio moves, we culled Newcrest. We're positive on gold. We'll talk about that in a second. So we culled Newcrest. We switched Healthscope to Ramsay. Healthscope domestic focus. Ramsay has a domestic business as well as an international business. Both companies have come out and said that domestic landscape is going to be tough over the next 12 months. So we think Ramsay will outperform Healthscope over that period, hence the switch. And we bought Ansel outright. We sold that over $25 a few months ago. We're back in at 21. It's a really good business, really good defensive earnings stream, and we thought $21 was a reasonable price to pay for it. So
just quickly on Ansel, perfect example of the service in a nutshell. Moved out of that, I think, 25.14 over that price. Now back in a similar price that we bought initially after making 14% last year. Perfect example of the services. I said, reason behind that, they're going to sell the Comdom business, and what is it, a 6-12 months play, or is it more of a medium-term thing?
No, I think in this type of market, this is a really volatile market, so everyone knows our thoughts around the market going higher before a meaningful correction playing out at the back end of this year. So you've got to be nimble in your holdings, and whatever the catalyst will be for Ansel, it looks reasonable now. They've got a really good earnings stream, and that earnings stream is growing. So we like that in a portfolio. It's a healthcare, you could classify as a healthcare stock as well. It's a sector we want to be involved in. So that's what we've done around Ansel. But yeah, 3 to 6 months might be that hold. So our view is clearly you've got to be a little bit more active around your investments, and it's not necessarily trading, but it's being active around your allocations in your portfolio.
Okay, and quickly, price target on Ansel is at 25 again, or do we think it pushes higher now? Or
25 is going to be the first level of resistance. We'll see how it goes there. So it's fluid, but 25 will be the first level of resistance. Yeah.
Okay, and lastly, James, just wanted to talk about gold. We bagged, I think it was an 11% profit on Newcrest the other day. The next day, Newcrest was off around 4%, then it was off again. Haven't checked it today, but just wanted to reiterate for the viewers out there our thoughts around gold. We've talked about Evolution, Regis and Newcrest as being potential buys. Now, for us to buy these stocks again, what has to stack up? Is it a certain level on the spot price? Is it a certain level on these stocks? And what are we expecting? So we've talked about it as being a pretty good and potential investment trade of the year with gold, with our gold target later in the year of 1450.
Yeah, so it's pretty simple. So gold has rallied really strongly over the first 3 months of this year. So the back end of December through to now. So a really strong move in gold. We're a little bit 50-50 in the short term. So we do have more. We've got a bullish expectation for gold for the rest of the year, but right now it's a little bit 50-50. What Trump is doing, the policies that are being enacted over there should be supportive of the US dollar. US interest rates should be going high. So gold in that type of environment will struggle a little bit. If we start to see inflation come through, then gold as a natural hedge against inflation, should come back from here. So like when you're 50-50 something at a particular time, we're better just to take it off, lock in the profit, sit back and assess the situation. We might see gold down $50 in a pretty short amount of time. Like I think the risk in the short term on gold is down, and that pullback would be buyers of. So we still like Newcrest, Evolution and Regis, and we'll be picking out of those three when we do go back into gold.
And just in support of your view, gold spot price didn't really go off, or didn't really even come off the day after we sold it. It was a small move, and stocks were off 3% and 4% and 5% respectively.
Yeah, you often see money come out of gold stocks before they come out of the underlying gold price. So stocks can often lead the underlying commodity, and I think that's what we saw. So this Trump trade, the concern around what Trump was going to do, obviously got money moving into gold. The fact that he's probably not as extreme as many thought he was going to be, the case could be there that gold's probably run too hot too fast. But as I say, we're 50-50 now, and I don't like taking 50-50 investment bets. So you need to be more confident than that to go in there and allocate money to a particular area.
Okay, thanks a lot for the update, James, as always. Anyone watching as well, feel free to reach out to us by replying to this email or giving us a call on the 1300 number, which was 1300 301 868. We'll answer the question either in the report on the Monday or we'll get back to you in person.